When the firm delivers its Q4 2022 report, what do you believe the price of Tesla's shares will be? Even experts are divided on how much to value Tesla stock in January 2023 following the company's Q4 results. Some people firmly believe that the current valuation of Tesla stock, which is approximately $123 per share, will hold. You definitely wouldn't want to miss this, even though some people think it will soar. The price of Tesla shares has dropped sharply in the last few months, losing nearly 37% in December and roughly 68% in 2022. With the anticipated release of the global Q4 and full year, Elon Musk, the CEO of Tesla, and the multinational EV powerhouse hope to end 2022 on yet another high note. Arrivals of Teslas in early January and late December. Tesla experienced its largest one-day loss in 11 months, sending more than 11% of shares falling. Despite the sell-off of Tesla stock, the company rebounded, reducing weekly losses. Musk recently reminded Tesla staff members that the emphasis should be on increasing the company's end-of-year deliveries, rather than worrying about the crazy stock market. According to Reuters, the decline occurred in the midst of a manufacturing stoppage in Shanghai, poor sales figures for the country, and ongoing discussion about CEO Musk's acquisition of Twitter. Analysts are still optimistic about Tesla, despite the fact that obstacles are anticipated for both the EV sector and the auto industry as a whole in 2023, and that Tesla delivery data is anticipated shortly. Last week, Tesla's stock increased by 1% to 123.18. Tesla's stock fell 18.5% to 123.15 after collapsing 16.1% the week before. Since the COVID crisis in March 2020, those are the worst weekly losses. Analyst consensus states that Tesla deliveries in the fourth quarter should total 429,000, or about 1.34 million for the entire year 2022, an increase of 43 over 2021. Additionally, analysts predict that the number of Tesla vehicles delivered in 2023 would increase by 46% to 1.96 million. In Q4 sales, which is expected to rise 47 to $26.01 billion, approximately in line with the previous 3 quarters, analysts predict Tesla's profits per share to expand 49 to 1.27, according to FactSet, a financial data business that includes more than 40 analysts that follow Tesla stock. Still, the outlook for the upcoming years for slower growth in sales and profitability. Although analysts are placing their money on strong Tesla deliveries and profits, the bull thesis of endless demand has suffered a setback. A number of analysts anticipate significantly lower Q4 Tesla deliveries than anticipated. Analyst Adam Jonas of Morgan Stanley reduced his target price for Tesla shares to a still high $250, but he also lowered his target delivery amount for the Q order to just $399,000 by the end of December. As previously mentioned, CNBC carried a story on Morgan Stanley's Tesla recommendation. The analyst emphasized the investment group's optimism and kept the price target for Tesla at $330. They also expressed optimism about the near-term future of Tesla, despite the fact that they believe 2023 will be a difficult year for the EV market overall. In our opinion, Tesla's competitive advantage may grow. However, as previously mentioned, Adam Jonas of Morgan Stanley lowered Tesla's price forecast from $330 to $250. However, given that Tesla's stock is still selling below $125 per share, it seems likely Tesla's Q4 deliveries likely easily beat Q3's record 343,830 EVs, which was up 42% from a year earlier, but fell short of analyst projections despite headwinds and macroeconomic concerns. In the most recent quarter, Tesla produced 365,923 cars, more than 22,000 more than were delivered, along with 1,865,772 Model S and Model X luxury EVs vehicles. Tesla delivered 300,125,158 Model 3 and Model Y automobiles in Q3. Given its production capability and current inventories, Tesla deliveries may have exceeded 450,000 in Q4 if demand had been extremely strong. Tesla's sales are anticipated to fall well short of those levels because of the necessity of large discounts in its primary markets. Deliveries in the fourth quarter at this level could cheer investors, but they might not allay their concerns. Shareholders will probably be more interested in hearing in the next report about demand and projections for delivery volumes in Q1 or the full year 2023 than in Q4 delivery data, as concerns about Tesla are mostly centered on what the business can accomplish in 2023. Sadly, predictions are rarely included in Tesla's quarterly production and delivery reports. Tesla investors are uneasy about their projections for 2023 for a number of reasons. The first is NIO, an electric car business based in China. NIO recently reduced its fourth quarter delivery prediction by approximately 9%, citing the impact of an increasing number of coronavirus cases in China's main cities. This increased investors' concerns about Tesla's performance in China's sales market. Accounts of Tesla cutting production at its Shanghai plant are another indication that demand may be declining in China. Concerns regarding the demand for Tesla's automobiles may need to provide more information before shareholders can get a better idea of what they can expect from the company going forward. Some of the recent headlines are undoubtedly cause for concern. However, it's extremely difficult to predict whether some of these issues are only short-term in nature, as the company tries to address temporary challenges, or if they're indicative of problems that could persist throughout 2023. Some days ago, Paulo stated on Bloomberg television that he was concerned about the state of the economy as a whole. Are individuals able to afford $60,000 cars? The market is also concerned about that. During the most recent results call, Tesla staff from all throughout the firm pitched in to assist with handing over automobiles to customers. The Austin, Texas-based company has a long history of going all out at the end of the quarter. A third of the quarter's deliveries, according to Chief Financial Officer Zachary Kirkhorn, occurred in the last 2 weeks of the third quarter. It should be noted that Musk recently shared remarks with Tesla employees via an email obtained by CNBC. In it, he told them that in the long run, he strongly believes that Tesla will be the most valuable company on Earth. Musk also thanked Tesla employees for their work in 2022, encouraged them to push hard for a strong fourth quarter finish, and asked them to volunteer and help deliver cars to customers before midnight on December 31st, if at all possible. Regardless of the Q4 results, there are 2 major catalysts for Tesla stock in 2023, which will undoubtedly be good news. 2 impending catalysts: the company's energy business's skyrocketing revenues and the much-anticipated launch of the Cybertruck may thrill investors. Even while Tesla's third quarter vehicle deliveries increased by 42% year-over-year, a smaller portion of the company was expanding noticeably faster. With 1,100 megawatt-hours of energy storage deployed, the company increased its yearly output by 62%. By far, the greatest amount of energy storage deployment ever attained was this. In an effort to better serve the rapidly expanding market for its energy storage business, Tesla stated in its quarterly letter to shareholders that demand for these products is still rising ahead of supply. Tesla said that it was increasing output at its Lathrop, California facility. As seen by the company's announcement on December 9th, that it had deployed 100 megawatt-hours of energy storage capacity in a single project in Belgium, the business appears to have maintained its momentum into the fourth quarter. Even said, Tesla's energy storage business is relatively modest when compared to the company's overall revenue in Q3. Of the $21.5 billion in overall sales, approximately $18.7 billion came from the automotive sector. Because of this, the company's car plans are probably what drives sales the most. For this reason, investors ought to pay attention. Management at Tesla's remarks regarding the Cybertruck. Elon Musk, the CEO, stated during the third quarter results call that the business is nearing the end of preparations for the much-anticipated all-electric truck, which will allow it to go into production. According to management, production of the vehicle is scheduled to begin in the middle of 2023. The Cybertruck was supposed to go into production in late 2021, but due to problems with the global automotive supply chain and more severe than expected logistical issues, Tesla had to prioritize the expansion of its current model lineup, continuously postponing the introduction of the Cybertruck. Although there's always a chance that the Tesla Cybertruck's release may be postponed once more, investors appear to be getting close enough to the vehicle to begin considering its sales potential more highly in their evaluations. To put the excitement about the car in perspective, Tesla has secured an estimated 1.5 million bookings by November 2022. For the time being, it is unclear if the price of Tesla stock will hover around $250 following the Q4 data. For more Tesla stock price forecast, don't forget to subscribe to this channel.